Hello traders, this is Rich from Tradesight. This is the market preview for Tuesday, the 29th of April, 2014. This is going to be the first day of a two-day Fed meeting. So we do have a lot of stuff going on a little bit later on this week. So we're going to get the Fed decision on Wednesday. Wednesday we're also going to get the ADP number, and then Friday's going to be the non-farm number. So definitely a lot of things coming up that could definitely affect the market. We definitely had kind of a setup day, or kind of a ringing out day, if you will, where we had a wide-ranging day, ultimately settling higher in the ES and the NQs. The Russell, however, the small caps were not able to kind of hang on and save themselves. The other thing is that while the advanced declines were just barely positive on New York, even though the NQ futures were up 10 on the day, NASDAQ futures were still down 700 issues. So even though there was some top-line strength, the market internally wasn't very strong, and in fact it was actually weak. The trend closed at 1.34. We had negative advanced declines net, and so kind of a tough day altogether. We did have some really nice plays today, especially on the short side, catching some things that were really fast movers. Short side's been very profitable. But anyway, so let's move on to the futures and take a look and see what the futures levels look like. All right, so here's a look at the ES futures in the daily time frame. You can see we had this huge wide-ranging candle. We traded about twice of the range that we did in the previous candle. You can see we dunked down all the way to the 6/8 level and ultimately closed back up here, just a little bit above the day's excuse me, the previous day's settlement. Only 6 handles. So things to watch here: the 8/8 level, 1875 on the upside. To the downside, the 6/8 level at 1843 3/4 is definitely one to keep in mind. And if we break lower than that, that 1812.50 that have been hammered on earlier are the ones to watch. Next up is the NASDAQ futures. Definitely weaker than the S&P futures still. You can see that even though we try to move up here, we did settle below the 10 EMA again, so we're still struggling with that. 10 EMA is starting to level off now, so this could be kind of a situation where we might want to pivot back up here. We do have this gap open still up above, and the 4/8 level is going to be really key if we can pivot back to the upside here. Market's still kind of getting wrung out, as I described before, but I think the NASDAQ is really going to be the key here. Not so much the broad market, because we definitely had a lot of rotation out of NASDAQ into some of these steadfast later cycle broad market names. So really want to see the NASDAQ start to kind of get its footing again, to really start to see some strength creep back into the market overall. Interesting thing on the day here: the bonds were actually lower on the day, so we're starting to roll back down here again in the bonds. We got up close to this 8/8 level and didn't take it out. So this could be a little bit of a lead here. They didn't rush into the bonds today per se for safety, even when the market was gyrating, and midday it was down pretty substantially. So didn't really see that. Didn't take out the old high. So this could be a little bit of a lead here, a little bit of a hint maybe that they want to put some risk back on here, or which would actually be the same thing as if they're really just kind of done selling some of what they needed to sell. Here's a look at the oil futures. They were kind of struggling for most of the day, and they finally wound up walking up towards the close, still below the 50 period moving average and the 10, so we're still short-term negative. But if we do pivot here, expect some pretty strong support here at the 4/8 level. It's a double level because it's the static trend line from this 9 bars up and also that 4/8 level. So we're only 5 bars down, but if we start to hammer on this, expect that to come into play and be useful as far as levels. Gold futures were a little bit lower on the day. They tried to pivot it, but essentially we've really been in this more or less lateral range here. We walked up, broke to the downside, had a break to the downside, and started walking back up last week. So look at this 50 DMA here at about 1319.5 as a level of interest on the upside if they do continue to walk up here. As far as the individual sectors go, the BTK was the one you really want to watch. That one didn't break down any further, and maybe trying to set up a higher low here relative to the old one. The XAU was lower on the day. The BKX was weak. The SOX were weak. the BTK, the biotechs were the ones that really were the momentum stocks to the upside here. Right in here is where Kramer was calling the momentum monsters. You had to be in them right before they rolled over. So just keep an eye on these. If these start to turn back up here, which they may, if they're done with this wave of selling, we could definitely see the market change character. So definitely focus on the BTK here. All right, here's a look at our new multi-sector daily chart. This is going to include the transports, which are going to be in purple, and the oil services, which is the gray line. Oil services were weak today, but the transports were kind of hanging in there. Want to see some good relative performance out of the transports. Definitely keep an eye on those for tomorrow. Want to see those continue to hold up here. Doesn't really matter if the banks turn a little bit lower, but you don't want to see that continued selling with the downside in the biotechs. I really think that's going to be a very, very important key here. I think this is the key chart here. This is the NDX versus the S&P. The NDX is the top number here in our calculations. So when the NDX is showing relative strength, this chart's on the rise. Obviously, the NDX versus the S&P has had relative weakness, but we're trying to start to level off here, and I think this is really important. If the NDX can kind of circle the wagons here and start to show some strength, we're going to see a little better trade in the market overall. Key thing to watch is going to be this prior low here in the ratio. If we take out this low to the downside, that's going to be a real cause for concern to put this lower boundary in play, and probably start a whole wave down in the S&P side of the market. All right, so here's a look at the individual sectors ranked from best to worst. The XAU was clearly the last lagger down here. Airlines were weak. The oil services were weak, which was kind of disappointing. Would have preferred to see them be a little bit stronger. Pharmaceuticals were strong because of some corporate news. So let's just kind of put that to the side and see what they do tomorrow. The oil index, the XOI, which is a broad base, not just the drillers, was fairly strong, which kind of makes up for some of the weakness in the OSX down here. Utilities were strong, a little bit of a safe haven. BTK was positive on the day, and I think that's the one that you really want to focus on going forward. Here's a look at the BTK. Got down near the 200 DMA again. We'd actually pierced it on an intraday basis a couple of times back here, but let's see if they can circle the wagons and maybe set up a higher low here. We don't have any bar support here in the daily time frame for that. We're going to have to wait for that, but definitely could see this 4-ace level put into play. If we lose the 200 DMA on a closing basis, that's going to be pretty bearish, and probably ultimately wind up putting this 0-ace level in play. But if we do pivot back to the upside, the target's going to be the 6-ace level here at the 26.56 area. Next one to really watch is going to be the oil services. I want to see them continue to hold up here. We've definitely had a pretty decent pullback here off of this overbought condition that we had. We were well into the overbought threshold on the GAN box here. We're plus 1-ace and almost plus 2-ace. So a pullback here back down to 6-ace would be, you know, a pretty reasonable move. What you don't want to see is this prior low taken out here on this pullback. So we'll have to see if they can circle the wagons here and start to work this back up to the 8-ace level and start to attract capital again to this key area. Next one I want to look at is the transports, which is going to be important. We have this 13 exhaustion in place. We are seeing some corrective activity as we expected. This 4-ace level at 7,500 in the transports is going to be pretty important. It's a double level. It's one of the big levels on the GAN box and also the 50 DMA. So really want to see that one hold. If we can pivot and turn back to the upside, this 8-ace level at 78.1250 will be in play, and will be the number to watch. All right, folks. As always, thanks for listening. This has been Rich for Tradesight.